On June 15th, SoFi Technologies CEO Anthony Noto sat down with Morgan Stanley analyst Jeffrey Adelson. They sat down to talk about things such as SoFi's path to profitability, the reverse stock split, as well as all new products that will be coming out in SoFi's near future. But in this video, I want to take that interview and condense it down into the most important parts that I saw from that interview, starting with Jeff actually asking Anthony Noto how they were dealing with the higher interest rate environment right now and if they're still hitting what they want in terms of their targets for their loan business. Anthony Noto answers in a very clear and concise way. So a couple different things. He said, one, we set objectives for around 40 to 50% in terms of variable profit margins on their loan business. He also said that they have a very good software for testing the different pricing and credits of their different consumers and how flexible they can be in terms of their rates. And most importantly, he said he passes on about 70% of that benchmark rate to their new consumer. Meaning, if the interest rate goes up about 1%, they're going to be passing on around 0.7% to the consumer, only leaving around 0.3% of a loss in terms of how much more of a margin they would have had before these rate increases. So that technically means that we're getting less and less profitable every time that these rates are increased. But that's across the board for the financial services industry. We're actually on the higher echelon of people who are actually surviving longer because of the amount of the benchmark that we're actually able to pass on to our new consumers. 70% is actually quite high. And it's not that we couldn't pass on 100% of that benchmark, but it's also a matter of keeping up to that same amount of growth rate that we want to achieve. So it's about how much is our, member growth actually growing by, while also being able to pass on those higher and higher rates. See, it was never a matter of SoFi student loan pause extension or rising rates, whether that was going to hurt SoFi. It absolutely was. That was not the question. The question is how much is this actually impacting the actual company versus how much we're watching it actually impact the stock, which in my opinion is drastically different. And then just going back, Jeff also asked, is there still people that are actually buying that debt off of you? Because institutions can actually buy the loans from the companies, and this is called securitization. Anthony Noto actually said that there's more buyers than ever, especially from customers that haven't bought from them before, because they're actually starting to reduce their risk and get some higher quality loans on their balance sheets because they believe that they're going into whether it's a downturn or a recession, they believe that they need to get into less risky assets. And Jeff actually asked Anthony Noto, why are they choosing SoFi to buy, less risky assets from? And is this because you guys underwrite at 740 FICO scores with a usual, stronger income level? And that's exactly what Anthony Noto replies with. He goes, yes, people are looking at an environment of great uncertainty and it's a flight to quality. And then he says this really cool part. He says they're willing to accept less yield for less risk. Meaning that flight to quality is very real, and people are now trying to just protect what's left on their balance sheet if we actually do go into a recession. Then Jeff just broadly asks about profitability, whether that's for GAAP profitability or even segment profitability for the financial services sector. And then Anthony Noto says, as clear as day, okay, SoFi will see the financial services business hit profitability or go positive after marketing by Q1 of 2023. And then in terms of stock-based compensation, they said that they know this is a big problem for the company and what investors see as a big problem, and that they want to address this. Also talking about their performance stock units, which should disappear by 2024, okay, which is around 33% of the overall amount of stock-based compensation, which will disappear as a fixed cost, as well as them trying to get it down to around the high single digits by early 2024 as well. And then bringing all this together is when they should hit GAAP profitability, by that time in early 2024. And this could even grow faster if Biden doesn't actually extend the program 2 more times, which is what Anthony Noto is actually expecting. They're not expecting anything to come back in 2023 or by 2023, even though, Biden right now is saying August 31st. So if it actually does come back August 31st, they're going to increase their guidances and everything along those lines because it's going to go faster than what they originally expected. He even goes on to say that it took 3 years to get $1 billion in deposits and then just another 3 months, this is with the bank charter, right, to get another $1 billion worth of deposits. They're now at $2.2 billion in total deposits and growing north of $100 million in deposits each and every week. Anthony Noto even touches on Galileo and how they say that they have partners that are mainly consumer-facing partners, but now they're more increasingly signing enterprise clients that are actually B2B, for which they never thought that they would be until they actually became a bank in which they could service this whole new league of clients that they did not even anticipate whenever first buying Galileo and then second actually getting the bank charter. And with this bank charter, they can can now be the sponsoring bank for not only Galileo, but also these enterprises that want to set up small to medium-sized checking accounts for their clients, as well as, other businesses that they're working with. Good examples of this, and I'm not even saying that they're their clients, but something like Square through Block or Shopify, with Shopify balances, this is a good way to set up accounts for other businesses that you have no part of being whenever you're actually being Galileo. You're just sponsoring the B2B business, but it actually bleeds through into being your clients because of a partnering, larger enterprise that are actually servicing those clients. And all of that now bleeds into Technisys with those same sponsoring banks that were taking over with our bank charter, also with our partners with Galileo, are now even being able to be serviced with things like unsecured credit cards or things like buy now, pay later, loans, or even products that we haven't even thought about yet. And Anthony Noto is just so over the moon with where Galileo and Technisys is going. Now, I'm not going to just read this quote out, you're just going to listen to it, but I mean, it's just mind-blowing how much that this guy, is really blown away by the management that he has in place for Galileo and Technisys. Check this out.
Yeah, I'd say in the course of acquiring a company at the scale of a Galileo or Technisys, one of the things you can never truly understand is like their operating tempo and their decision-making process. You have to be part of the company. And after about my fourth weekly, like what we latest call business update meeting, I'm like, I couldn't be happier. Like, I just need to check in with Derek and Miguel, once in a while. Like, they're professionals, they know what they're doing. This is a well-run company, and it's really complementing Galileo and bringing partners to the table from the traditional financial industry that wouldn't have come to the table before. But because it has something that's so unique and valuable, it's been a great complement, and it's incredibly well-run.
But back to Jeff, he actually asked Anthony Noto, what is your goals with deposits? Right now you're at $2.2 billion. And what's your goal? $5 billion? $10 billion? Like, where are we? And now he didn't give specifics. Anthony Noto, he said, we're on track for our end-year targets for deposits. And as long as we stay at that rate with high-quality new account openings and the members that we're getting, we will increase rates naturally because we're going to have a bigger base of clients that are going to start signing up for direct deposit. And then going on, finally, someone speaks up about the reverse stock split and asks Anthony Noto what is going on. And now Anthony Noto says this is one of those things that is a break in case of emergency, and that he sees a lot of people on social media getting upset. This is a precautionary thing that they want to set up in case of a recession, and that they have it just in case. And now this doesn't mean that they're going to use it at all, but they want to make sure that, institutional investors have an opportunity to invest in SoFi without extra disclosures in front of their client's face. He said in no way does this reflect how much they actually believe in the true vision and guidance for this company. He said they're one of the few companies that actually exceeded their Q1 expectations and raised their guidances for the full year, and that they're still going to continue to drive higher and higher results, which will eventually reflect back into the stock price. And now hopefully you guys have made it this far into the video, because this is where it really gets spicy. Jeff asks, is there anything else in the works in terms of SoFi Technologies going forward? And Anthony Noto just goes off with a list of such cool, bullet points, things that we haven't heard before that I want to share with you guys today. He said, right now in the insurance industry, we are just a partner that provides lead generation for home, auto, and life insurance, okay? They say they generate about $250 million in insurance premiums a year, or about a $1 billion run rate. If they can actually be the main benefactor of all these premiums, they could really get into the insurance game. Now, they said that this will be a long time away, but it's still something that SoFi Insurance has their eyes on. They also said that tax planning is another area of expertise for which they want to also get into, like SoFi Tax, right? This could be a main area for them to sort of build out that one-stop shop that they just don't have anything in works right now. Remember that these products are much further down the line than some of the other things that they're working on, like the fact that they only have one credit card right now. Anthony Noto said that there's so much more expansion there for something like a premium credit card or a buy now, pay later card for them to actually expand into different ways of monetizing their clients. And then they said that there's another big product that they're working on called SoFi Plus that gets triggered whenever you do direct deposit with them. And so it's going to be free for those, users. They also said that you might be able to pay for it, but they haven't quite decided on that. They're really just going with the direct deposit for now. And what they said is that they'll give benefits for better rates in loans, better benefits in the Invest app, as well as benefits in more higher rates for rewards. So then you can actually get better things on credit cards and, points towards putting into your, crypto account or whatever along those lines. So if you're a direct deposit user with SoFi, you're just going to be on this upper echelon of client for them, which will also help cross buy into other products products, because at that point, hopefully you'll be at a better, rate in terms of their loans than any other company around, considering that we're already, very, very competitive. But if you have this SoFi Plus, type of reward system, that you're just not even going to be able to go anywhere else. They said that you could be expecting this product as early as the back half of this year. So very, very exciting and coming soon. Jeff then asked about the direct deposit clients, right? Because if you're going to be making a SoFi Plus, like, who are the people that are signing up for this? Is this, a different clientele than what we're normally seeing? Or is it the same sort of high income, very good client that is signing up for the direct deposits? And I'll leave Anthony Noto to explain exactly what his thoughts are.
They're exactly the people we like to acquire. They are high income. They're very active in spending. Their deposits continue to grow, even though they're doing direct deposit and spending. So they're the right characteristics for our business that we bring at the top of the funnel.
Now, that is everything from the interview, all the greatest points, and honestly, it was packed, filled with great stuff. But that's not the end of this video, as I still want to go on to a new topic. And now that is obviously, Anthony Noto himself buying more SoFi shares. If you've seen the channel before, I've practically been covering it on every single video because he just continues to buy. I can't help it, right? So as you can see here, I've condensed it. So in March, I show all of his purchases all in one. This was not one single purchase. And then as well in May, he bought this many shares at these different of prices, averaged out, right? That's obviously the total cost for those months. He didn't buy anything in April. Now in June, he's stepping it up. He's already passed his May numbers, and he's just jumping right into the pool. So he's buying consistently, almost at the 300,000 mark since my last video. He's bought over nearly $600,000 worth of SoFi stock just in the last couple of days. It's just ridiculous. He's increased his total, number of shares, as you can see up here, by 16.2%. The total amount that's just bolded in just June is over $1.5 million, and the chart total is at $3.5 million, making his total value that he's holding in this company at just a little over $20 million. Now, that's with the price of the stock at $5.70. That, if it does start to climb or even double by this point, which I do think it could do within the next 12 months, obviously that 20 is going to look a lot, juicier at 40.6 million, but we'll just have to wait and see. But if you guys want more information about that entire interview, go ahead and check out the entire Q&A right here. But if you could, on this video, give me a like and subscribe down below if you want to see more financial content just like this.